What is going on, traders? Could the S&P 500 be back on its path to above 4,000? We talked about how the month of July is gearing up to be one of the most significant months for the rest of 2022. We have the Q2 GDP numbers coming out on the 28th. We already had the CPI numbers coming out, and on the 27th, the FOMC, the Fed, is going to decide by how many basis points they are going to raise rates. However, there are two things that I want to draw your attention to here. One is the pattern that the S&P 500 is making. If you look at the chart right now, it is making what is called a fractal. We did this exact same pattern not that long ago, back in March, April, which ironically was the last earnings season. Now remember, after CPI, GDP, and the Fed rate hikes, what is the fourth most important factor? Or not in that order, but what is in the top four most important factors that we are leaving out from this discussion, and that is earnings. Now, what's so far leading this relief rally in the S&P 500 and in the markets in general are earnings. We had the bank earnings coming in mixed, but some of the bigger banks having much better than expected earnings, which pulled the market through a bit. We then had IBM drop significantly better than expected earnings, and we had Netflix dropping mixed earnings, but surprisingly providing good guidance. Remember, guidance, it's not just about what happened before, but what the company expects to happen from a financial and from a business standpoint in the future. So the last two earnings, when Netflix reported a net loss in subscribers for the first time in a long time, well, now they provided guidance saying that they are looking to add 1 million users by next year. Sorry, I meant next quarter, not next year. And with that said, we saw the company's stock price rise at least 6% at the time of this recording. And Netflix being one of the powerhouses, remember, it is part of FANG, and it used to be considered one of the main stocks in the stock market. It is continuing to help push the market through these technical levels. Now, the next major stock to report earnings is considered a harbinger of potentially things to come because it is one of the biggest companies in the stock market and one of the biggest weightings, not only in the SPY ETF, which tracks the S&P 500, but also in the NASDAQ ETF, the triple Qs. And that is, of course, Tesla. Now, just like in Tesla fashion, Tesla already disclosed its delivery numbers, so there is no surprise there. They delivered 254,000 EVs during the second quarter of the year. This is the first time in a long time that Tesla's deliveries were down, but this was due to the closures in Shanghai. So similar to Netflix, all eyes for Tesla will be on guidance. Well, not all eyes. Obviously, we're going to take a look at their margins, their free cash flows, etc. But guidance will be a huge discussion factor in their earnings because aside from the Shanghai closures, if you alleviate those issues, is Tesla back on track to an upward trajectory? Now, next week, as of the time of this recording, week starting the 25th, is going to be the biggest week of earnings because the biggest companies in the world all report earnings the same week. We have Amazon, Microsoft, Apple, and Google all reporting the same week. Two report on the 26th, and two report on the 28th. So if earnings are better than expected or guidance is better than expected, then we could easily see, in my view, a repeat of this fractal pattern that we saw back in March, April, and the S&P 500 in the short term could actually get close to that 4,100 level. And that will be just in time for the GDP reading, which comes out on the 28th. If we are officially in a recession, what is that going to do to the markets? Well, it depends how much of this is priced in, and nobody can say how long a recession will last. But there is one fact that I brought up time and time again, is that the stock market bottoms out an average of 4 months before a recession ends. So if it is expected to be a shallow recession and we have the major companies back on track again, then we could be closer to a bottom than a top in the stock market. And by the way, we already sold cash secured puts on our favorite stocks and indices because that is a way not to wait for the bottom. It's a way to name your own price using the tool of options in order to get into certain positions if you are not trying to buy and determine whether this is the bottom or not. We are also likely going to be building a somewhat neutral position on Tesla for earnings through the use of what is called an iron condor, something that I've done countless videos on before, and a strategy that has been pretty successful for us when volatility has subsided. So I will send those out in the Traveling Trader Academy, along with some of the buys that I'm looking at. If we do officially enter into a recession, my finger will be on the buy button, because historically I know that buying during a recession, regardless of which recession you bought, if you have a long-term horizon, you will always come out winning. Obviously, the conversation changes a bit if your retirement horizon is much sooner. And if you want to learn the full array of option strategies, you want to learn how to day trade, you want to chat with traders about trades you are looking at, you want to get trade ideas from other traders of all experience levels, Join the Academy. Link is in the description below. Would love to have you. We keep our spots limited because we want to make it an intimate group that provides value to everybody. So you will see that link in the description to apply. And if you're able to get in, then I will happily see you there. All right, so what is the second data point that I mentioned at the outset of the video? The second data point is what we call up volume. This is one indicator that going back to the formation of the S&P 500 has never been wrong. And what this indicator says is that in the following year, when advancing volume is 87% of total volume for 2 out of the 3 days coming off of a 52-week low, the next year is always positive. And we just hit that marker this week. So in layman's terms, when the S&P 500 makes a 52-week low, if 2 out of the 3 days following that, we see an 87% of advancing volume. And advancing volume means the total volume of stocks that are advancing, meaning stocks that are moving up. So when 2 out of the 3 days following the 52-week low, 87% of the volume is advancing, the next year's gains in the S&P 500 were always positive. So just a quick recap, we have the biggest earnings week coming up. We have Tesla reporting tonight as of the time of this recording. And then next week, we have Amazon, Google, Microsoft, and Apple. If those companies provide better than expected earnings and or provide better than expected guidance, then in my view, we could see a push on the S&P 500 to around the 4,100 level. And all eyes will be on the GDP come July 28th to see if we are officially in a recession or not. Now, if we are not in a recession, meaning if the GDP hasn't contracted and is actually above 0% growth, and we have the trail of better than expected earnings or guidance, then in my view, we are way closer to a bottom on the S&P 500 and in the market in general. In my view, a 100 basis point rate hike is priced in by the Fed. If you look at the FOMC watch tool, if you look at the Fed futures, but whether they do 75 or 100, I believe that what the Fed is going to do is priced in unless they go above 100 or go below 75. And remember, this is an election year, so I would not be surprised at all to see some dirty politics being played, as is always played by both sides when it is an election year, trying to force the Fed to slow down on monetary tightening by September in order to push the markets up and try to influence the results of the election. This happens on both sides. This happens all the time. All presidents in history have tried to influence the Fed, even though they're not supposed to. So don't make this a partisan issue. That is just my analysis. Take it for what you will. Hopefully you got something out of this. If you did, give it a big fat thumbs up. Leave it in the comment section below. Let me know what you think about the Fed halting in September. Let me know what you think about a recession, whether you're buying stocks or not, whether you think Tesla and these other mega cap companies are going to beat earnings. There's so much to discuss, so leave it in the comment section. I will try to respond to each and every one. I love hearing from you guys. If you want access to all of our plays, including the Tesla earnings play we're about to send out, including our long-term buys, our cash secured puts, if you want to learn how to day trade, you want to learn how to trade options, you want access to the Zoom calls with me, you want to chat with thousands of traders, check the link in the description. It is a great value, the Traveling Trader Academy. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.